All right, welcome to the Best of U.S. Investors, two regular guys show. I'm Trent and this is Mark. Today we're going to get into a couple things. First off, we're going to talk about Bitcoin because of the volatility and the movement in Bitcoin. Two, we're going to talk about global debt. And three, we're going to get into payroll and what that looks like for the United States. So thanks for joining us, Two Regular Guys show. We're just two regular guys who are super into the stock market, and we hope you enjoy this show. So let's get going. Cool.
So let's talk a little Bitcoin. We like Bitcoin. Trent and I both do. We see it as kind of a hedge against the devaluation of the dollar. You see that the United States is in a lot of debt. We see a lot of treasury bills being put out there. We see China not buying our treasuries in Japan anymore. So we're putting out short-term treasuries at 5.4%, replacing long-term treasuries at less than 0%. That's causing the amount of interest payments that we pay as a country to skyrocket. It'll probably be over $1 trillion here within a year that we're paying just in interest rates. So the more we do that, the more we devalue our dollar. And I think I saw a deal that our dollar has been devalued by 25% in the last year alone, just due to inflation and for this money printing that the Treasury does in treasuries. So we look at Bitcoin because Bitcoin is only 21 million Bitcoin. Okay, and about 19 million have been mined so far, and probably 6-7 million have been lost. As being a viable asset class that you may want to consider, and since February, or actually January, the SEC approved spot Bitcoin ETFs, of which there were probably 9 in the U.S. alone that came out. One led by BlackRock for sure, and Infidelity. We had Grayscale always had one. They kind of sold off their kind of a higher priced ETF. And then not to mention all over the world, Bitcoin spot ETFs have been popping up all over, even in Hong Kong. In Hong Kong, you can actually, with your spot Bitcoin, sell it out and get your Bitcoin. You can't do that in a US ETF as of yet. But we look at it as value because it's supply and demand. It doesn't really have inflation on Bitcoin. It doesn't have the ability to create more Bitcoin. The system is set. The system also is secure. It's never been cracked. Now you've had exchanges be hacked, okay, which is why a lot of people take their Bitcoin and they put it into cold storage, they call it. But again, it's something, since the SEC has come out and approved these spot Bitcoin ETFs, has made it available to not only institutions, more retail investors, family offices, and you're seeing a skyrocketing effect of even sovereign countries buying Bitcoin, along with companies like MicroStrategy that are putting their treasuries into Bitcoin. And even a little company down the road called the Kansas City Cattle Company has decided they're going to put all their treasury into Bitcoin and not treasury bills. Well, anyway, the U.S. spot Bitcoin exchange traded funds acquired around an amount of Bitcoin equivalent to 2 months worth of mining output in just the first week of June. Mining output is only 450 Bitcoin a day. Okay, so in the first week of June, these exchange traded funds have actually picked up nearly 2 months worth of that output in just 1 week. So this influx highlights the growing appetite for Bitcoin as a financial asset, underscores its increasing integration into mainstream investment vehicles, which means gold, equities, bonds, real estate, everything that you can art. People are starting to see it now as an asset class that your portfolio may or may not want. You may want to have in it. So during the trading week from June 3rd to June 7th, the 11 active Bitcoin ETFs in the United States collectively purchased 25,729 Bitcoin. Okay, you don't think that's very big? Okay, 25,000 Bitcoin, big deal. That's valued at $1.83 billion. Okay, in 1 week.
Wow.
And now consider there's only 450 Bitcoin mined every day, and they don't sell those. The miners keep them themselves because they want to make money on Bitcoin also. So this acquisition is nearly 8 times the amount of Bitcoin mined during the same period, which was around 3,100 Bitcoin. according to data from the sources of Bitcoin Magazine and such. So when you look at Bitcoin today, it dropped down to 66,200. Okay, Bitcoin is very volatile, so it's an asset class that I don't trade. I just acquire and hold because I believe, because of the dynamics of Bitcoin, the technology of Bitcoin, uh, and the fact that there's only 21 million, that I'm going to hold on to it. And I have a certain percentage of my portfolio dedicated to Bitcoin, and I know that not only is Bitcoin digital property, is also digital technology. And Trent has talked about this before, and I'll let you talk a little bit, Trent, about how Bitcoin and maybe AI together are working together in the future, and how it even makes Bitcoin even more valuable.
Yeah, so you think about Bitcoin, came out and they, of course, put it as a currency. And I don't think you and I believe that in any way, that it is a currency or it is to replace a currency, but more of um, a store of value. If you're buying an asset so that it stores value, you buy a piece of real estate, a house, condo, whatever, you're storing value there because historically that value hasn't depleted. Now we've seen in the last 20 years, real estate take a hit, but at the end of the day, real estate's worth more than it was in 2009 for the most part. So what Bitcoin really, when the white paper on Bitcoin was written, there was a formula put together on how it would be created, stored, secured, and then a system and a process that would have to be multiple verified to make any changes, which makes it really a secure technology. And so you're seeing companies like Solana, um, Polkadot, Cardano come out, and they're introducing different uses for this, for the code in this, and it's creating more security. And you think about, I was just reading an article about Snowflake and about a big hack that happened. And Snowflake is a cybersecurity software company, and they're challenged because of this um, penetration of the security of it. Well, crypto has never, in Bitcoin in particular, has never been hacked. It has never been, code's never been broken. It's the way it's designed and managed. And I think when you're talking about AI, artificial intelligence, and this rapid movement towards it, we saw Apple come out with their new introduction to what they're using AI for and how it's becoming your assistant. It's actually now doing math for you, which, as I spoke to Carrie this morning, what's the point of teaching math now in school until you run out of battery life on your calculator, right?
Or the grid goes down.
Or the grid goes down, which is even more of vulnerability. But what I also look at this with AI is you're talking a lot of data, and you're talking also a lot about personal data. And your biggest risk, I remember when I got a social security number as a little kid, I think it was like 12 or 13. I went down and they got the card, and they like, the people who had issued it said, don't share this number with anybody. They can hack into your whole, they can hack, I don't think it even was a word at the time. But now today, our social security numbers are everywhere now. Our credit card numbers are everywhere. And what's becoming more and more important is now we're introducing this artificial intelligence element to the mix. Security is going to become more and more important. And that's where I look at the whole cryptography element of crypto and Bitcoin, and what it has demonstrated over 13, 14 years is that right now at this point it's impenetrable unless you as a human make a mistake and leave your keys out in the open, and your friend your enemy copies it down and hacks your system. That's a human element. But that's what I think where this all comes together is these two technologies will morph into each other and support each other is the security element of it.
And I think that's the whole side of AI is blowing up, and and you're seeing that really NVIDIA and AI has really been moving the markets basically
Mhm.
by themselves because I think they represent almost 30 some percent of the market, the top 10 in the S&P.
Yeah.
And most of those are technology, and everyone says AI, like Apple said AI yesterday, and their stock's up over $200 today. And I think this is the forgotten element of that, not only just for AI, but for the elements we talked about prior, just being that the dollar's devaluing. And if you are planning to retire, as we've talked in several last, couple regular guy shows, you know, you got to make 7 to 12% just to kind of break even when factor in inflation and the devaluation of the dollar. So with Bitcoin on average for 15 years, making well over 40% a year, if
Mhm.
not more. It certainly should be kind of a thought process, and it's not financial advice, but a thought process of it should be probably in your portfolio somewhere. It is in mine, and I think it's in yours too,
It is.
Trent.
So
Yeah,
I think I was thinking about this, the lack of interest in US Treasury bonds right now and how they're having to inch the yields up to get more people to buy them. And so most people allocate their portfolio based on historical 60-40 splits, 60% equities, 40% bonds, or 80-20, 80% equities, 20% bonds. What they're fighting right now is one, a devaluing dollar, a rising inflationary market, which I think you and I came to the conclusion you add that all up together, and it's probably right around 19-20% that you're already having a hurdle, you're already having to jump. And then you're going and allocating to bonds, and you're allocating, in most cases to the most secure rated bonds, so AAA or AA rated bonds. That includes US Treasuries along with highly rated corporate bonds. The problem is that when it comes to the treasury side, they're constantly having to inch that yield up and that value falls. So it's a teeter-totter effect. Well, you're collecting interest on that, and right now they're pretty strong interest rates on US Treasuries. So anywhere from what you do, you flip them every 30 days, where going out to 5, 10, and
I flip them every week.
every
30 day
week.
roll. Yeah, it's a
You
ladder.
roll every 30
Yeah,
days.
30 day. Yeah, but it's a
Yeah.
ladder.
Yeah, but I'm looking at this going, if what I think will happen with federal funds rates after the election, I think they will raise them again to fight inflation, and we'll be in more of a 1970s stagflation environment.
I agree with that.
You're gonna have to hedge that out. And I think with just the supply and demand element of Bitcoin in particular, and I'm only talking Bitcoin because a lot of these other cryptocurrencies, I hate saying currency because it's not a currency, but crypto assets have multiple millions, if not billions. And so the whole supply demand element is sort of skewed. It doesn't work as well as Bitcoin. I really look at the allocation model and go, okay, if I'm running a 60-40 split, hypothetically, and I've got 40% in bonds, I may be smart to take out a portion of that and allocate it to Bitcoin to offset that price devaluation. And when price devaluation and yield exceed and you start losing money in bonds, you've got to hedge something out with it. And I think that's where Bitcoin really could come into play, but more on the side of supply and demand. I mean, what did you say? 2 months worth of
Yeah,
mined Bitcoin has already been
in 1 week.
in 1 week.
Well, of mine capacity, the capacity every week is what 450 times seven.
Yeah.
Okay, so it's
So
3,500. I think it's 3,500 total Bitcoin, and they've done what 2 months of that already, just
already.
fine.
So the
Yeah,
demand is so strong that you're going to get volatility in it, of course. The whales, the guys who bought it for $1 back in 2013, 2014, are
yeah,
probably taking a little profit and they're allocating out, but it's being consumed. I really think you're going to see this explosion in Bitcoin, and that portion of, if you had that portion of that in your portfolio, you could offset the devalue of the dollar, the potential fall of equities, but also bonds in particular.
Well,
Um,
and that's been the question with, if there's so much demand and only so much supply, how come the price is going down? Well, I think it's just what you said. There are people who have been in this for 15 years saying, okay, I got in at $2. Now it's 70,000. I'm going to take a little and live my life a little bit. And when that stops, uh, and it will, because people are going to say, okay, that's enough. I'm going to, next time I sell, it'll be 100,000, or next time I sell 150,000, or, maybe it's 250,000,
yeah, or a million.
depending on what you believe. And Kathy Wood, okay, which a lot of people like, she says it's going to 3.8 million. Okay.
Yeah,
There are power law models out there. You can see that at some point it's going to hit a million within by 2030. You see that power law model that a lot
yeah,
of people put out there, and it's been following it. And if you look at it over 15 years, the price of Bitcoin has been following within that log model. So if you believe in math, which is I do, it's
yeah.
just strange to see that, and you can't really do that with the market, but you can with Bitcoin. So for me, it's enough of a deal. It's to me, it's kind of like Amazon back in the day, and I'm like, who's going to buy a company that just sells books out of a garage?
Right. Yeah. Yeah.
Yeah.
I'm with you. And I think it is, I think more and more as we see a continuation of lack of interest in US Treasuries and we see markets weakening, you're going to see more interest in a store of value asset class. And that would be, a Bitcoin would be in that category. So
And quite frankly, that's how I look at it. I look, and again, people think about Bitcoin at $66,000, like I can't afford that. Well, you can buy $1 worth of Bitcoin. It is broken up into Satoshis, 100 million of them in each Bitcoin. And
yeah,
so as the price of Bitcoin goes up, your Satoshi value goes up too. So it's not like you have to buy or sell a full Bitcoin. You can buy a Satoshi if you want, or 10,000 Satoshis, or whatever it is. And when you have it in that store of value, and if it's going up, and this is what Michael Saylor would say about his treasury, okay, and put it all in there. Well, if it goes up 40% a year, and I'm borrowing against my Bitcoin at 0.5%, it's really,
makes,
this is makes a lot of sense. So I never have to take it out. So when I want to pay these back, these convertibles, I can pull a little bit of Bitcoin out to pay it back, or I just convert them over,
yeah,
and so if you look at it that way, I can have a Bitcoin that I bought, and it was at $10,000. Now Bitcoin's at $100,000. I can pull out a portion of that if I need $5,000, convert it to a currency, fiat currency, anyone I want. If I want to go
mhm,
to, a mark or a euro, or I want to go to the US dollar, or I want to go to yuan, I can do that.
yeah. There's a lot of flexibility, and I think it's something that I think more and more of the industry, especially the financial advisory industry, especially after you get past 6 months of since the ETFs were initiated, you're going to see more and more sort of just your general financial advisor group start to look at it. It probably won't be it won't be fast. They
No,
won't
they're
there won't the
slow.
adoption rate won't be fast, but
By the time they get to, it'll be what their clients demand. If their
yeah,
clients demand it, and they say I'm going to move my money somewhere, then they'll start doing it faster.
yeah. Well, it's like I was talking to my old business partner about it, and she said, "Yeah, we can't solicit it, but we can buy the ETFs if they if it's an unsolicited order." So the more awareness and people who are watching this who have financial advisors may go to their financial advisor and say, "Hey, I'd like to allocate a portion of my bond, my fixed income portfolio to this."
I think it's interesting that those shops, those financial advisors can't solicit it, but you got Fidelity and Arc and BlackRock and sovereign states and banks now out there just buying the crap out of it.
Oh yeah.
Like, oh, we can't buy it for you unless you ask for it because it's so dangerous. But then on the other side, you've got everyone buying it.
Well, it's sort of a game. You as the institution accumulate a whole bunch, and then you let the what 98 or 100,000 financial advisors in the United States turn them loose. You already got a base position in it.
Well, I think that the coolest thing about Bitcoin is when it started, in 2009, that the real early adopters were just regular retail poor folk like us, who got into it. And it wasn't there were some that, a lot of people said they weren't buying it, some of the rich people, and then we find out they were,
Yeah.
prior to these ETFs. But now with the ETF door open, it's legitimate, and people can buy it now. And
You,
and
you,
these very conservative financial advisors can now offer it.
yeah.
But the
You
cool
think
thing
about
is
the,
the people who got in early are rich now and who kept it, you know.
yeah. You think
Um,
about it, the evolution of any new thing, it starts with the nerds.
yeah,
They're the smart guys. They saw what crypto was. They started it. They helped create it. They bought a ton of it, and they've held it.
they
So
believe it. Yeah.
yeah, and when Forbes comes out with their richest 400 people in the world, today I look at it and go, that guy who's number one isn't really the richest guy. It's
Yeah.
probably some young guy sitting in, who's been holding it for years, and he's the first
Well, and
trillionaire.
definitely by 2030, if it goes up to where they are predicting, these are experts, not me. But
Yeah,
let's say, if it's a half a million or $1 million a coin, and some of these kids or people have 10,000 coins or more,
oh,
think about that,
yeah, yeah,
and a lot of these younger people, they believe in the value of it, not they believe in the religion of Bitcoin, and they're never selling, they say.
yeah.
Never.
Which
Okay.
I'm like, at least pay your electric bill with
Well,
it.
yeah, I'm sure they don't have to worry about that. But again,
Yeah,
it took me about 2 years to figure it out and say, you know, to actually become, okay, this is a real asset, and I'm not worried about losing all my money in it. That's me personally. You still can in any asset lose
sure.
all your money. But for me, I think it's worth it. And with what we're seeing with the national debt and what we're seeing with the money printing, what we're seeing with inflation, it's certainly worth a look to go out and at least do some due diligence and read about it. Look at some videos with Michael Saylor in it, Raoul Paul, those guys,
Yeah,
and it leads right into why would you want a little bit of it? It's what we're going to talk about next, which is debt.
yeah. So I was on my X account. I hate saying X. I have preferred Twitter. I thought that was a really good name. I was reading some information about where we are in the first quarter when it comes to global debt, and we're presently at a staggering 315 trillion. So, unfortunately, we are one of the two biggest holders of debt, the United States and Japan. And if you're familiar with Japan's economy over the last 30, 35 years, it's been in a hole because just mismanagement of their overall economy and government mismanagement of their financials, which we're starting to see more and more. And it got me to thinking about here's 33 trillion dollars in debt. The United States is adding a trillion in debt every 100 days. So if you think about that in the sense of a year, we should anticipate our national debt to go up 3 trillion and some change. Okay. That's a lot of money. And unfortunately, it's being financed at a higher rate. So back when a lot of this was accumulated, the US, say, 10-year treasury was probably right around, below below 2.5. Am I off on that? Probably even a little less.
Very less.
Um, yeah. And now today you're up in the I haven't looked this morning, but what, 4.5, or higher range. Well, the government has to pay interest on that every year, and if they're borrowing that much more, and there's a lack of interest in owning US treasuries, then you've got a situation where it's going to be so overburdening. And I think on a global scale, it really got me to thinking about, is debt what it used to be and considered to be what it used to be? You know, is it more of now it's just whatever, it's not that big of a deal, especially when you look at it from the two biggest powerhouses on a global scale economically, Japan and us, and then even China. Um, is it just more of like, well, that it's not that big a deal anymore? And will it be sort of swept under the rug in a sense?
Well, it is a big deal because on a microscopic view, the banks are the same in the same boat as the Fed and the Treasury Department. That's what happened to Silicon Valley Bank. Their Treasury reserves were all long-term treasuries yielding under 1%. And they thought that the rates were never going to go up because the Fed told them it's transitory, and so they're
Right.
going to be fine. And then when they had depositors wanted their money back, they had to sell out their bonds, okay, at a loss because they weren't mature yet to pay the depositors. And so that's what we're seeing now with the Federal Reserve, you know. And if we look right now, they just came out, and I'm just using a banking example, unrealized losses in the banking system were on the rise, and that's according to the Federal Deposit Insurance Corporation, the FDIC. These are the people that have to bail out the banks, okay? Who,
Mm-hmm.
by the way, don't have that much money in their account to actually bail out too many banks. So as quarter banking profile, the FDIC says banks are now saddled with more than $500 billion in paper losses, and that's what you're talking about, Trent,
Mm-hmm.
in paper losses on their balance sheets due to largely exposure to residential real estate market. Okay, so instead of treasuries, which they do have a lot of treasuries in their, underwater treasuries, they on top of that have this real estate on there. They're the buildings I mean, every day you see a story. This building was sold for $100 billion, for 10 years ago, and today they got it for 20 million, or whatever. That's exaggeration, but it's a lot lower. Uh, so although banks can hold securities such as treasuries and building mortgages and leases until they mature without marking them to market on their balance sheets, the unrealized losses can become extremely liable when the banks need liquidity. Same with the US. The difference with the US is the US can go out and they can put out treasury bills. Okay, and that's what they're doing. They're putting out treasury bills with a higher interest rates on the 1 and 2 month on the short end of the yield, while letting the long end of the yield be less interest, which is called an inverted yield curve. And we've talked about inverted yield curves before.
Mm-hmm.
And so we're having bonds come off the balance sheet in the Fed at a low interest, and we're replacing with high interest short-term bonds in hopes that things will straighten out, and then we can move it back to normal. But as we've talked about, when the yield curve uninverts, that usually results in a recession, which I believe is going to happen.
Yeah, and honestly, when it comes to recession, I think we're already at the beginning of it, if not in
I
the
think
second or third inning of it.
that a lot of people are in recession, and just because of the inflation and
Yeah,
because their payroll has not gone up at the level of inflation. So people are hurting. You can start to see it with the higher interest rate or the credit card debt delinquencies, car delinquencies. You're starting to see it. Okay, and people are giving up discretionary items. They're starting to look at, if you wanted that boat and you have cash, those boat prices are coming down, camper
hmm,
prices are coming down.
yeah,
People are getting rid of their toys just to live their lives.
yeah. I mean, I'm seeing it in housing in our area down in Florida. We're seeing more and more homes go on the market, and more price adjustments going on as we get further into the summer. And so, I think I've thought a lot about this recently, in that a lot of this that we're seeing in the stock market, how this is being reflected in the stock market, is not being reflected. Right now it's a handful of companies, 5 to 10, that represent 34% of the S&P 500 and their returns. And I honestly think this is after election, a lot of this will start to reset and settle. I wouldn't be surprised if government is pumping this market, as the what is it, the pump patrol or something like
The
that.
plunge protection patrol.
Plunge
Yeah,
protection, yeah.
yeah,
And
yeah.
so I wouldn't be surprised if we get into after the first year and we start to see these items that we've talked about for over a year now start to come to the surface
Yeah.
and really affect where things are. So,
Yep.
and I think that's where you look at this allocation wise, you start to position for a defensive, capitalize on the market going up, but buy the assets that, when you have a risk off environment where people leave equities and go to risk off assets, we saw that during the housing crisis. the great financial crisis, a move into U.S. Treasuries. So, but I also think, Bitcoin will be one of the bigger winners in that as well. So,
And I think that's why we started the Platinum Channel. We started, how do you see markets? Well, we're going to use the same thing that institutions use. We're going to use technical analysis and moving averages and oscillators and find the best ones for us and teach these processes out there and let people on their own go out and look at how we do it and improve it for their own sakes. And so you don't have to be in the market all the time, especially when it's like the way it is. And like you said, we see the S&P at all-time highs, but if it weren't for 10 stocks, we would not be at all-time highs in the S&P. Okay. So, and then you, on top of that, look at what we're seeing in all these reports that come out. And let's just look at the jobs reports. Okay. And, talk about the plunge protection. I think there's a information protection plunger out there too, because how can it be so rosy out there? Let's just take the three jobs reports that I look at. There's the establishment report, the household report, and those two are come out with the Bureau of Labor Statistics. Okay. The establishment report calls up employers and say, how many people do you have employed? And that includes people who are on disability and part-times and all that. And that's what they ask. The household report calls households. And in fact, they only call 55,000. Now they're going to call 50 because they're running out of money, their budgets, I just saw. So they call up households and they just ask, are you employed or not? And that's where we get our employment number. And that's where we get our labor participation number. So, and then the third one is the ADP report, which they call it the private jobs report. So let's just look at what came out of these. So the establishment report, okay, this last week came out and said that the U.S. economy added 272,000 jobs in May, much higher than a downward revised 165,000 in April. So 165, 272, and above the forecast of 185,000. They're looking at 185,000. The reading is also higher than the average monthly gain of 232,000 over the prior 12 months and 246,000 in the first 4 months of the year. Okay, so that was the establishment report. So the household survey that calls houses, and a lot of people think that this is more realistic, but it takes into account self-employed workers also. That figure showed the economy lost 408,000 jobs and 625,000 full-time positions last month. And in fact,
wow,
full-time jobs fell $605,000 people in May, and part-time jobs gained 286,000. And it also showed that in May alone, 414,000 immigrants, both legal and illegal, gained jobs, while 663,000 native-born Americans lost jobs. Okay. And when we dig into that a little further, we see that the number of part-time jobs well exceeds full-time jobs, but the reports don't really separate that. So people are taking part-time. You and I may have 3 part-time jobs. That's counted as 3 jobs. Okay. So this is why we're seeing discrepancies. So then you look at ADP, and ADP is a private company. They do payrolls. So they can see, payrolls go up, payrolls go down, people get laid off. Private businesses in the U.S. added 152,000 workers to their payrolls, the least in 4 months and well below the forecast of 175, and a downward revised 188,000 in April. So I'm seeing ADP tell us, look, we're seeing lower jobs. I'm seeing the household survey say, yeah, we're losing full-time jobs. And then you look at the jobless rate. So the unemployment rate rose to 4%. That's the highest since January of 2022, up from 3.9% the previous month. Okay. And our labor participation rate dropped to 62.5% from 62.7%. So everyone looks at the establishment report and yay, look, the economy is resilient. People are having jobs. When you look at the establishment report, there's a line in their spreadsheet where somebody estimates the birth and death rate of new businesses. And the birth and death rate of new businesses added, forget how many. When you look at the birth and death rate, it's a approximation added by somebody on a spreadsheet. And so manipulation, you kind of consider that birth and death model for new businesses, either new businesses or old business, added 1.9 million jobs since last April, or 56% of all payrolls added during this period. This means that half of all job gains in the past year are from an Excel spreadsheet, which assumes that 1.9 million new jobs were created from new businesses. And that's a part of the establishment survey. So that's why you're seeing the establishment survey so high. It's a guesstimate. Okay. Someone puts it on a spreadsheet.
Right.
It's not actual. It's not verified. Okay. Now the ADP is verified because they do payrolls. The
Right.
household surveys pretty much because people they call you have a job or not. No, yes. Okay. So so don't believe everything you see, but our markets move by reports, but our reports are not always what they seem to be. So
No.
take that into your thought process when you're like investing or long-term investing, or you have ETFs, or okay, can I afford to have this system fall apart with what I know, and lose 30-40% of my retirement savings and wait for it to come back because time in the market's better than timing the market.
Oh yeah. And I mean, I think it's one of those things. There is a motive to make those numbers look good. And that is to keep those who are in power in power. You understand how a man gets paid, you'll understand his motives. And that is an example of it. I mean, the ADP report is, we used to run payroll through ADP. So they're seeing, unless they're getting manipulated, which I hope not, they're seeing truly what's happening. I think it was something as you were talking about that, I got to thinking, what would be a better rating or system would be to track household net income, not gross income, but net income. Because what I think you would see is the amount of net income since March of 2020 has rapidly declined. And when you see that decline in net income, that means cost of living went up, your income may not have gone up, and you see that shrinking. I think that to me, that is a true number. If you could gather it, um, of the American household
No,
and
that's
really the
that's a
stability of this country.
that's a really good point. I mean, when you think about inflation, everyone's like, "Oh, the CPI is coming out next week," and you know, is it going to be 3.2 or 3.1 or 3.3? Well, who the hell cares? I mean, seriously, because as a two regular guys, I know I get my insurance statement on my cars, and my insurance just went up 20%. Okay, that's a little higher than 3.2%. You look at your property taxes, they went up 20%. Oh crap. You look at your house insurance, but none of those things are covered in any of these reports.
No.
Okay. And then they take out food and energy because those are too volatile. So what do we have left? I mean, air,
Well,
the price of air stayed the same today.
right.
It's total insanity. But we have countdown clocks on CNBC that CPI and PPI and what will the Fed do? And the Fed looks at it, and our
Right.
favorite thing is the PCE, and oh boy, and it's all a bunch of crapola because you and I see it every day, and everyone who watches who's just ordinary people out there know
Yeah.
what's going on, and they think we're the stupidest people in the history of the world.
Oh, yeah. Well, it was interesting. We were in Spokane, Washington last week, and we happened to get some time, and we went to a mall, which I don't think I've been in a mall in years.
I didn't
But
know they were still open.
yeah, I mean, there's a big one down in, downtown Spokane, Washington. But we went into a Gap, and I believe, if I remember right, Gap's earnings came out pretty strong, this about 2 weeks ago. And I got to thinking about that. I was like, their earnings have gone up because they have to charge more, and their revenue went up because they had to charge more, you know? Um, so I mean, if you have to charge more, of course your revenue is going to go up. I mean, maybe you sold less, instead of selling to 100 people, you sold to 80 people. But if you charge 20-30% more because your cost of goods went up, of course your revenue is going to look more positive. And I think some of these retail numbers that I've seen in the last month, it's a demonstration of cost of goods to create the product and service, and it reflects in the revenue numbers. It's really not true growth if you think
Well,
about it.
and you look at the numbers that the government puts out on consumer spending. Oh, look,
Yeah,
consumer spending went up. Well, of course it went up because inflation went up. If I'm spending more on bread, my consumer spending went up because I'm spending more on bread, bacon, whatever. So
Yeah,
it's not like I'm going out and buying a Ferrari anymore.
right.
I'm buying
Yeah.
stuff that I have to live on and I have to pay for my electricity, which that has gone up. Okay.
Hmm.
Gasoline prices have gone up. It fluctuates as gas does, but it's a lot higher than it was, 3 years ago.
I think if you really want to know personally in your household, you want to know what if you are if getting ahead, look at that net income of your household. And I gotta believe, looking at credit card, debt explosion that we've seen, um, it's in the negative in a big way.
Well,
And
there's only two of us in our household plus Jan's cats,
uh-huh.
but and she does the grocery shopping because I hate going to grocery stores. But she has said that we haven't changed our eating style or anything, but our grocery bill from week to week has gone up 25 to 30% over the last 3 years. It's just more for either less for less stuff too.
Right.
She's like, I'm not buying the donuts anymore. I'm not buying this anymore. But it's still gone up.
Yeah. It's
I miss
it
those donuts too. Those were really good.
oh yeah.
The
Oh,
little powdered ones and little chocolate ones. I used to
uh,
get those. I don't. Thanks for the inflation. I don't get those anymore.
right.
I know.
Every it's a treat if you can.
I know. So even I'm affected by inflation.
Right. Well, I think at the end of the day, you're seeing a store of value asset, Bitcoin, is it's fluctuating. I honestly think it is trading within a channel and it's an accumulation phase.
I think you're right.
I think you're seeing an increase in global debt on a like country level, but also on an individual person level. And then you're looking at some of the numbers that are coming out of the government, and you just got to just shake your head like this is just a manipulated game. So how do I best position for this? How do I best protect my family's wealth and create wealth out of it? And so I think we give you some examples in doing that and how you could do it.
And I
So
think, if the only one that cares about you and your retirement is you. I don't
yeah,
care. And there are good financial advisors out there and they really try hard. But if you have 100 clients, you're only 1/100th of their thought process.
yeah,
Okay. And they'll put you into an allocation based on some program that they have that it says, okay, over X amount of whatever, this will be good. But if you go back and your X amount happens to be, you know, after the great financial crisis, then how long does it take you to get back to even.
right.
Okay. And what does that lost opportunity cost? So, all I'm saying and you're saying is, give yourself an opportunity to educate yourself on this. And you don't have to be a brain surgeon or, a rocket scientist to do it. We have a good Patreon or a good Discord with a lot of people with a lot of backgrounds from all over the country and all over the world. And they have really good ideas and we use them. We
Yeah.
talk every Friday on the Zoom channel, on the Zoom call, and go over charts and we go over where the money's flowing and what people are feeling.
So Mark, I interviewed two of our subscribers here recently. And the biggest thing I got from them was two things. One, um, process, how to understand fundamentally, but also technically, and bringing that together on how to read markets, stocks, bonds, whatever you want to chart, whatever you want to study. But the second biggest thing or the first number one biggest thing that they've said so far is community, is that it's part of something, that it's a collective of people who have the same interest and they're able to bounce ideas, win or lose, and really work together. And I think that's, one of the things, Kerry's mission with Best of US is to educate more people and empower people. And they both, so far in the interviews, have both said, I feel more empowered and more in control of my financial destiny than I had prior. And they both were working with professional advisors. Um,
And
and so it's very
they were both
encouraging.
professional people in their backgrounds
Oh
too.
yeah, like
Yeah,
high end. Yeah,
yeah, yeah.
absolutely. But no, I think that's the thing. If if you're looking for a community, a group of people with like-minded interests, and you're open to learning and asking a whole lot of questions, Best of US Investors Platinum channel, I believe, is right for you at this point. So check us out. Come join our group and participate and create and preserve your wealth. So I think that's all I got on my mind today, Mark.
Yeah, yeah. And in several days, I'll be seeing Trent personally as he passes through flyover country and stops by and sees us.
Yes, if I can encourage everybody, just get in your car for a week or as long as you can and just drive around this country. Number one, it's beautiful. It's totally different in every area, but you also get to meet and see people and you get different points of view on life, and it's pretty uplifting. It's pretty interesting.
I
So
think that, yeah, I think I'd have to agree with that. You know, the traveling that I've done over the last couple of years in the situation that our economy is, that the American people's spirit is really still, it really inspires me because people still are friendly. They still want to help people,
yeah,
you know, at least in the areas that I go. And it's not doom and gloom all the time. And it's not, you know, they'll tell you, look, this is harder than it was. But, you know, we survive. We're Americans. We go on and we help each other out. And that spirit is still out there, despite what you see every night on the nightly news or what you see, you know, in financial channels. So that's encouraging to me too. So like you got to see a lot of the country. You went almost diagonally across the entire country and back. So
right.
you got to.
I'll be over 5,000 miles by the time we end this on Monday.
Yeah.
So yeah, no, and I think that what's amazing is just the geography of our country, but more importantly, the people. Um, you know, in most cases, I would say everybody's the same. They just want a better life. Um, they don't want any hassle, and they want to be able to go do what they want to do. And that's
Yep.
what, in my opinion, America was built on. So,
I agree.
yeah,
Yep.
cool.
That's why we're just two regular guys
We're
in
just
two regular guy country.
That's right.
Yeah.
Exactly. Well, thank you for joining us. If you like the video, please hit the like button and subscribe to our YouTube channel. But also check us out at bestofusinvestors.com and consider joining the Platinum channel where you get a whole lot of stuff. And we'll see you next week.